Let's continue our chat on the markets and even some precious metals too. Chris Vermeulen's with us, founder, chief investment officer, Technical Traders Ltd. Thank you for being here. So I was just looking at the week. You know, it's been pretty good. 2024 has been pretty good to investors overall. A few blips, but how do you feel about the S&P 500, for example, going forward?
Yeah, I'm from a technical standpoint, looking at the stock market, it is still in a long-term uptrend. It's been a very strong rally, really, all of last year and carrying through this year. But there are some technical things coming into play. The S&P 500 has reached a technical target that was hit about a month and a half ago, and then from there we saw the market pull back about 6%. This is a technical Fibonacci target based on some pretty large price ranges from 2022 lows to mid last year, where the market started a multi-month correction. So to me, it feels like the equities market is actually starting to get pretty exhausted at this point. We're seeing lots of indicators telling us that we're seeing money flows into very defensive sectors like utilities and precious metals, things like that. And that is a sign we need to be aware of. Whenever we see utilities and things like this start to dramatically outperform the markets, we tend to see a big pullback. And so we could go into something like you see on that chart where we have a multi-wave, multi-month pullback in the stock market that could go through part of the summer here.
Right, and so there has been talk about that, about maybe it is exhausted or, you know, overbought or whatever, needs a breather. To your point on utilities, sometimes you do have that inverse relationship, to your point. You know, at the same time, there are people who love these tech names, who think growth stocks can move higher, and many others for that matter, because of better than expected earnings that could happen in the back half of the year as fundamentals improve. Would you be more likely to be in or out, or those are certainly things you're watching, right?
Yeah, I mean, a lot of people want to be in the technology. They've lost a lot of steam. If you look at the big top 7 tech companies, most of them are in a downtrend, far from their highs. They've all had a rebound, like Tesla and Apple. They're struggling. The majority, what really drives the overall broad market higher, especially the S&P 500, the Nasdaq, they're actually all struggling. And I believe that, you know, the market's going to really struggle to move higher from a technical standpoint. Now, there's potential we might see another run higher, maybe into the elections. There's the election cycle that's at play here. So we might see that. But overall, we're kind of in that sell in May, go away standpoint where the market typically tops out around May, June, and then we see a multi-month correction through the year and then potentially bottom in October or something like that. So there's a lot of mixed signals in this market. But the fact that we're seeing utilities, consumer staples, healthcare sector, and precious metals rally at a time where the stock market is struggling and slightly moving higher to try and regain those highs from about a month and a half ago. Every time we've seen this type of setup, the stock market has had a multi-week or multi-month correction. So this is something I'm worried about because we could go into a very big pullback. And the early warning sign here, as you can see, Nicole, is in a late stage of a bull market cycle, which is that blue cycle you can see there. We tend to see precious metals come to life. We see the energy sector come to life, which energy stocks are on fire as long as gold and precious metals. And we see industrial capital goods start to do well. Lots of factories and companies have had killer years and in terms of good performance. So they're upgrading their assembly lines, their machines. Yeah. And so the industrial sector's done really well with earnings. And we've seen this before where the industrials, precious metals, and energy tend to move higher and rally while the stock market struggles. And it's generally an early warning sign before the economy kind of slows. We see a much bigger market correction. So there's a huge red flag. I mean, we're still long as an investor in this market, but we're very close, I think, to seeing the music come to an end, which, yeah.
Yeah. Look, I mean, I think you've come on and you've liked precious metals before. It's not the first time you're here saying that. And in fact, over the last 6 months, I mean, gold and silver are each up over 20%. So we've seen a nice run in those names. You know, I don't know how you recommend folks get into gold. Is it an ETF? Is it looking at the miners? What would you say to someone who says, hey, that sounds like a good investment idea? What would you say to them? Because it has run up about 21% in 6 months.
Yeah, there's a few ways. It really depends on your risk tolerance. The easier, kind of low risk, simple way is to move into an ETF. I love ETFs. It's pretty much all I trade now or invest in. And like GLD, a simple gold, there's a lot of different gold, physical gold ETFs. And I like gold because even when the stock market starts to struggle and potentially starts to maybe go into a much bigger correction, gold is disconnected from the stock market. And so gold, we've seen in the past, continue to rally and move higher by several percentage points while the stock market goes down 5, 10 or more percent. So that's why I like gold. Is it's pretty slow and dormant, but it is a very good defensive safe haven play. And, an ETF is a simple way to get into the space and move into something with low volatility and protect some capital.
Right, understood. And what about how to get into silver?
Yeah, there's an ETF for that. SLV is the symbol. Now, I look at silver in miners as a much more volatile play. Simply, it moves percentage-wise very quickly, so people tend to get in to try and make quick money, but then when it goes the other way, they panic. It can move 20-30% very quickly. So you can get in with an ETF, and same with gold miners, like GDX is a way to get into the gold miners, but they carry a little bit more volatility, or a lot more volatility. And when the stock market sells down, they typically move down with the market. Gold is disconnected, and that's what my whole theory here is, a rising tide lifts all boats. I look at the stock market. If you know what the SP 500 is doing, the overall stock market, if the tide is going up, most stocks and assets go up. If the stock market's going down, we don't want to hold anything linked to the stock market, like gold miners. Those gold miners could get pulled down with the selling pressure, where gold is a commodity. It's not connected directly into the stock market.
Yeah, it's good to see you, Chris. Thank you so much. Chris Vermeulen at Technical Traders. Thank you so much.